In fact, let me bring on board Sandip Agarwal. Who better to speak about IT and the impact of all of this on Indian IT, the read-through. He's fund manager, Sowilo Investment Managers. Sandip, great having you. First, let me get a sense from you. Outsourcing bookings down 15%. Is this just delayed demand, which will likely translate, or is this demand destruction due to AI? What's your read-through of this?
Yeah, hi, good morning, and thanks for having me on the show.
Very good morning.
I see Accenture number on three parts. First of all, what is the number which they have reported? That looks fine, means there is no disappointment on that. Now, number two is the bookings. Obviously, it is 14.7% down, but within that managed services still slightly better. But yes, it is down, and it is not unexpectedly down. So that is definitely a negative read-through. And the third is that the guidance cut. I don't read too much on the guidance cut because ex of Federal Reserve, you have to align your growth accordingly, and that's the reason.
Well, losing you on this line, Sandeep, but what I understand is that you're not too worried about the guidance cut from 3 to 5% to 3 to 4%, and that's because the Federal Reserve, the federal component of this cut was 100 bips, and that's largely what is translating on the guidance. I'm not sure if we have any neutral in his stance.
Yeah, but you mentioned on one interest.
Fairly neutral in his stance.
Yeah, but you mentioned on one interesting fact about the mid-level orders which Accenture is trying, and what we heard from the domestic market, which is Indian markets, where Indian IT companies have a good hold with respect to the kind of orders they get, is that aggressive pricing is coming from Accenture for the Indian markets, with discounts as much as 20% from what what Indian IT companies are offering. So there's an aggressive push to increase the portfolio in India by them. And when you say that mid-level orders is what they're targeting now, it's like countries in India where there are a couple of big projects coming up, whether it's AI-led or transformational orders, where Accenture is trying to be very aggressive on the ground here as well. So that is one key takeaway which we're getting from the industry, that Accenture is active, and it's coming from the fact that there's a pressure on top line for Accenture there.
And even the book to bill, Sajid, that has fallen from 1.2 to 1 time, which kind of gives you a sense that the pipeline will be more difficult over the next year or so, and that the build out of that will be important. The negative read-through, especially from an Indian market standpoint and an Indian IT standpoint, is also the fact that if Accenture is going mid-market, that will mean heightened competition, right? Which will again be negative. Sandeep, back with us. Sandeep, let me allow you to continue your read-through. You weren't too negative with regard to the cut in the guidance, is what you were saying. Please go ahead.
Yeah. So I'm saying that, obviously the current quarter numbers are good, so no negative surprise there. And the AI impact has not been mentioned anywhere for the reason for softness in booking or guidance cut. So these two are positive read-through. The negative read-through is that the order book is materially low, 15% year-over-year down is quite a substantial low. So, the deflationary impact of AI, as we have expected, will continue for 3-4 quarters, out of which 2 quarters are there, I think, behind this quarter, and maybe max next quarter more, you may see some deflationary impact. So once that happens, I think, we will have a level field from where you can grow. And I think, Accenture's growth rate always has been 2-3% lower than the Indian IT growth rate. So I don't see where, the analyst forecasts are there today in Indian IT. We see a material impact. See, stock rub-off effect of Accenture 18% falling, you cannot deny that there will be some. I think from number perspective, we will be in a much better position from, in fact, this quarter. That is what my expectation is.
Sandeep, do you see a slowdown coming in for discretionary spends, given what Accenture is also talking about?
So, if you see the composition of Accenture versus Indian IT companies, we don't have that kind of exposure to West Asia region, where Accenture has a much material higher number. So we will be a little bit insulated from that. Also, we have a very high exposure in the European and US market, and I don't see that, those regions still are showing big impact. Obviously, discretionary spend is low. That is a combination of uncertainty over war, uncertainty over, the corporate earnings, uncertainty over the interest rate, and uncertainty over AI impact, all that. And also remember, there is a euphoria within the AI space, and because of that, obviously, a lot of money will continue to move till that space performs. So there is also overreaction because of that. So I would say that, right now probably is the time when you buy. As I mentioned earlier, hardware scale spends have happened after 20 years, so it has to be hockey stick, which is behind. Then, those people who are selling those offering like Microsoft, Grok, and all that should do well for a longer period of time. And then, IT services where you manage those day-to-day client offering, that is starting now. So I think one more quarter, there will be some pain here and there will be gloom and doom. People will talk about death of IT and all that. But I am very optimistic given the current valuation. I am not saying it is a high growth industry. It is a lower growth for longer. But even for lower growth, longer industry and high good profit growth, there is a minimum multiple which you assign. And I think we are below that range now. So we will see good sharp recoveries in next 2-3 years. I have mentioned earlier, we see PAT growth of 50 to 70% depending on the EPS growth of 50 to 70% depending on the companies. And that will at least that same multiple give you that kind of return, which is a very good return in next 2 to 3 years.
Interesting an opinion. But Sandip, always good having you on the show and chatting with you. Good to be speaking with you and getting your views on the Indian IT space. Take a look at what our market setup is